Hi there, welcome back. You're still tuned into Market Fatafat, a show where we tell you about all the buzzing stocks in under a minute. And for that, now let me go across to Ansh. Ansh, let's talk about Glenmark Pharma then. And why is the stock buzzing today? I believe it's on the back of a brokerage note.
Yes, that's right. Stock is up over 2% in trade now, and we have a brokerage report from HSBC, and they have actually upgraded their rating to buy from their previous hold rating, and they have also raised the target price to 1,100, which is almost 20 to 22% away from the current market price. They have also said that the quarter 3 was a disrupted quarter on the back of restructuring of the distribution model. Lower R&D spend and startup supplies from Monroe plant is favorable for margin expansion too. Also, if we see the chart, then the stock seems to have climbed over the 20 DMA, giving a good positive stance. Also, it has gained over 15% from last Thursday lows. So those reasons the stock is in focus today.
Alright, with that, let's welcome our new techie, Dhwani Patel, who's the founder of Finversify. Dhwani, hi, welcome to Market Fatafat. Dhwani, the stock that you've picked out is NTPC for us. NTPC, this counter has been, on our show several times, and for this counter.
So the gains that we are seeing over here are just phenomenal on this counter. It gave a breakout on the weekly chart at 253, 255 levels, and post which we've seen the upward rally continuing on this particular counter. On daily chart, it is suggestive that the rally is here to continue. From the current level also, one can go long into this particular counter. We are trailing near all-time highs over in this particular stock. So with a trailing stop loss strategy, one can go long in this in this counter. The stop loss that one needs to maintain over here is of 330, and looking at the weekly charts, the kind of momentum we have seen earlier in this counter, 400 is the next target on this particular one.
400 is the level that Dhwani is watching out for on NTPC. Let's talk about Coal India then, because that's another stock in focus today. That stock is still taking the beating of the management con call takeaways coming in, down 3% as we speak. And let me take you through what the con call takeaways were. The management says that they may miss the FY24 production goal of the 780 metric ton that they had set earlier by 10 metric tons. They're working on making up for that 10 metric ton miss, but the 780 metric ton target is the one that they're setting for now. They will be offering 15% of the Jan to March production through e-auctions, and they aim to sell more than 15% volumes through e-auctions in FY25. Now, all subsidiaries are offering 10 to 20% of their output for e-auctions as well, and e-auction premiums have fallen from 115 to 120 levels to just around about 45% levels in quarter 4. Now, e-auction premiums have started declining due to the increased availability of coal. Now, they believe that coal prices will stabilize at current levels for the next 12 months as well. No consideration to increase the FSA coal price at this point in time is the word coming in from the management, and their FY25 capex target is also at 17,500 crore rupees. On the other hand, we did have some positive brokerage notes coming in the morning as well, but that did not seem to aid the stock because the stock is still down and out in trade, down about 3% as we speak. But well, that was on the fundamentals for Coal India. Dhwani, I'm going to come to you on the technicals for BHEL, and what a rally this stock has seen, right? Almost double in the last 6 months. So tell us, are you seeing any more upward momentum in this stock, or do you expect it to cool off anytime soon?
The cool off is not a question over here. The stock is here to continue the upward rally. The 50 period exponential moving average here is acting out as a good support for this particular counter. On a daily chart also, recently we saw in the 2 sessions that the stock went down and took a support at the 50 period exponential moving average at 202 levels, and from where we saw the rally coming back in picture again. From current level also, one can definitely go long into this particular counter. On the short term basis, I would say 245 is the next target that one has to look out for a stop loss on the lower side standing at 225.
Alright, moving on to another counter, ONGC, that is in focus today. We saw a sharp spike coming in the morning. In fact, those gains have cooled off, but we saw a spike of 2% coming in the morning. And that's coming on the back of the fact that the company's shareholders have approved merger of 5 companies: Imperial Energy Cyprus Limited, Imperial Energy Nord Limited, Redcliffe Holdings Limited, and a Biocon Holding Limited, and San Egeo Investment Limited with the Imperial Energy Limited, which is a subsidiary of ONGC. Now, post this merger, the number of step-down subsidiaries or companies in Cyprus for ONGC will be reduced to 3 from 5 companies. And on the back of this news flow, we're seeing, ONGC is in focus today, cooled off those morning gains, but we did see a sharp spike coming in the morning today.
Alright, Rachesha, I'm going to come to you now and let's talk about why you've picked up Kotak and Federal Bank for our viewers today. We did highlight on Kotak earlier among all the management reject, but why is Federal Bank in focus? Tell us more.
Well, yes, the stock in fact is declining in trade, nearly 6% lower in trade as we speak. In fact, several media reports suggested that Federal Bank had shortlisted Mr. KVS Manian as one of its CEO candidates, but there was nothing official from company's side that had come in. And now that Mr. KVS Manian, who is currently the whole-time director of Kotak Mahindra Bank, has been redesignated as the joint managing director of Kotak Mahindra Bank, speculations about Federal Bank appointing him as the CEO have now come to an end. So that's a negative that has come in from Kotak Mahindra Bank, and hence the stock is declining nearly 6% as we speak.
All right, moving on. Ansh, Power Grid is the stock that you picked out for us, soaring away in trade more than 3.5%, I believe on the back of a brokerage note. Take us through what this note is saying.
Yes, the stock is up almost 4% now, and we have a brokerage report from Bernstein, and they have given outperform rating and target price of 315 rupees, which is almost 10% away from current market price. In the report, they have said that company has is a low beta stock with 18% return on equity and 8% PAT growth. Also, capex over next 2 years is around 30%, understated by consensus. Still see an upside in valuation. Also, interstate transmissions, batteries and smart meters are new growth areas. In addition to that, company has access to steady cash from existing assets and low cost of debt. Also, if we see the chart, the stock seems to have given a breakout from a horizontal resistance trend line. So for those reasons, the stock is in focus today.
Alright, well, thanks Ansh for that. That's Power Grid on the fundamentals. Dhwani, let's talk about Power Grid on the technicals, because even you have picked up this stock for our viewers. Now, this stock is up 50% in the last 6 months. So what's the cost that you're seeing ahead for this stock on the charts?
We've already seen a run-up coming in Power Grid. 15% of an up move is what we saw from 245 levels to the current level of 285. And as Ansh rightly pointed, it's a horizontal line breakout that we are seeing on this particular counter from the current levels. The next target on this one comes at 330 technically, and the stop loss that one needs to ideally maintain on the lower side is of 270.
All right, moving on to another counter, Ramkrishna Forgings, and she have picked this out for us. I believe it is on the back of an order win. Take us through the details of the news flow.
Yes, that's right. It's in focus on the back of an order win. So the stock is up almost only 1%. So they have received an order to supply a light vehicle segment across North America, and the contract size for the order is around $220 million, and this contract spans over a decade and marks the company's foray into new vertical within the forging sector. Also, if you see the chart, the stock seems to have given a breakout from actually an upward sloping resistance trend line touching 1 month high as well. Also, it trades above key DMA levels.
Alright, with that, Dhwani, let's talk about IndiGo on the charts, and what are you spotting on the charts for us? What's the momentum that you're expecting?
IndiGo, we've already been seeing that the stock is trading since the breakout that it has given at 2,600 levels. We are seeing the stock is making a higher high and a higher low formation. So the upward rising channel, we are currently at swing lows right now. So it's more of a swing trade that I'm looking up at in this particular counter. From current levels, one can go long. The target coming up on this particular one is of 3,300 over here, and the stop loss that ideally one needs to keep for a better risk and reward, as well as technically where we are seeing the support coming in is at 3,075.
Alright, with that, let's also talk about Swan Energy, because that's in focus today on the back of an 80 Now exclusive. Now, Swan Energy is in talks to raise 4,000 crores via a qualified institutional placement or a QIP. Now, mutual funds, insurance companies and select FIIs are showing strong interest in Swan Energy's QIP. That's the word we're getting from our sources. And well, the Swan Energy QIP is going to be used for debt reduction, for facility modernization as well. And so far, the management has denied to comment to ET Now's queries, but this is the word that we've been getting on our from our sources. So we'll see how this development goes going ahead. But on the back of this preliminary news flow, the stock is up 2.2% as we speak.
Well, moving on to another stock, CIE Automotive. Now, a couple of news flows here. Firstly, we look at the numbers that came in for CIE Automotive. Not a very happy picture for the results. In fact, the revenue is down. It was absolutely flat. It was down 0.3%. But the PAT was down 74% on a year-on-year basis. Even the margins, if you look at the EBITDA, also the EBITDA came in at 11% on a year-on-year basis, and the stock is it's down and out 2.5% in trade today, trading towards the day's lowest point. But besides that, the company has approved a final dividend of 5 rupees per share, and also they've approved the increase in capital of Bill Poch de Mexico and to waive off the right of first refusal to subscribe to the said capital increase. Now, the CIE Galfer, the other WS of the company in Spain, shall subscribe to the said capital increase. BF Mexico will cease to be a direct subsidiary of the company, and also the company recognizes the completion of the closure of operations by BF Precisions and has further considered and approved the proposal to launch a process of voluntary liquidation of BF PPL. And on the back of this news flow, CIE Auto is absolutely knocked down in trade, down at 2.5%.
All right, let's focus back to the technicals once again. And Dhwani, Gujarat Gas is the one that you've picked out for our viewers. Tell us, what are you spotting on the charts? The stock has not done much in the last few months. So what's the next level that you're spotting out for this, and what's the support level as well?
Gujarat Gas, particularly this counter, we've been seeing that it's not done much. It was trading into a low formation, but then we've seen a breakout coming in at 480 levels, from where we've definitely see a run up coming in. Particular focus for today's session and for the past few sessions is on the gas sectors, IGL, MGL, they're all doing well. Gujarat Gas, particularly technically, we are seeing the volumes being coming in this particular one, and the moving averages, we are trading above all the moving averages over here. 50 period is again acting as a good support level in this particular counter. The next target on this one comes up at 600 for a stop loss that ideally one needs to keep over here at 540.
All right, with that, it's time for us to slip into a short break. You don't go anywhere. We'll be right back.